So what is Terra Luna and what is Terra Luna 2.0? This is what everybody is talking about right now in the crypto space. So in this video, I'm going to break down exactly like what is Terra Luna, how this token crashed, and how you basically need to protect yourself in the crypto space as an investor, because at the end of the day, nothing is guaranteed. So Terra Luna really highlighted that, and we're going to talk about UST and Tether coins and all of this stuff, right? So again, my name is Cliff Pierre. I'm the author of What is Bitcoin? Understanding Bitcoin and Blockchain Technology. I'm going to put a link to the book in the description below. So I consult businesses on crypto and how to get into the crypto space and all this other stuff, right? But for the purpose of this video, I just want to break down this specific token. Unfortunately for me, I didn't lose any money in this token. Full disclosure, I was not invested in Terra Luna. I'm happy I wasn't invested in Terra Luna, but at the same time, this is why you don't put all your eggs in one basket. So Terra Luna, the collapse of Terra Luna and USD have been dubbed the biggest crypto blow up in recent history, right? So the Terra Luna coin has fallen from a peak of more than $117 in April 2022 to barely 1/100th of a cent, sending shockwaves right across the crypto market. The crash of May 2022 requested a burn address and entirely new blockchain that led many people to question how it actually works, right? So Terra Luna is a native token of the Terra, a blockchain developed by Korean firm Terraforms Labs. A total of 32 million was raised to fund its development through the private sale of Luna coins. An investment came from like centralized sources, Binance, Hubo, OK Exchange, etc. Right? So Luna was launched in 2019 and was one of the most decentralized finance coins. At one point, CoinMarketCap ranked it in the seventh largest by market capitalization. Since the recent crash, it has slumped to occupy the 213th spot as of May 23rd, 2022. So Luna is basically, I'll read a little more and then I'll break it down. So the aim of Terra blockchain is to create stablecoins, tokens designed to combine the decentralized freedom of cryptocurrencies with the stability of fiat money, right? So Luna is a key piece to the system, and it is described as a staking or protocol token. So the blockchain has implemented a dual token system between the stablecoin Terra USD and Luna to achieve this aim. USTs are minted by burning Luna and can also be swapped for Luna. For example, if the USD value goes above $1, the equivalent value of Luna would be burned, which mints more UST, making it less valuable. Whereas if the UST price drops below $1, they are swapped for Luna, which in turn makes UST more valuable. The relationship has been likened to that between the moon and the earth, as they rely on each other for stability. Burning Luna coin is essential to this dynamic, as it incentivizes users by giving Luna its value and UST stability. Before the crash of May 2022, there was a limit of 1 billion Luna coins in circulation, and if this number was exceeded, Luna was burned. As of May 23rd, Luna has been circulating a supply of 6.5 trillion. So basically, the guy that founded Terra Luna, he created this algorithm, and this algorithm was meant to connect UST and Terra Luna into kind of like one, right? So if one collapsed, the other's going to collapse. As one was rising, the other one was kind of like, just the ecosystem was building together. People felt comfortable investing their money in UST, which is basically like a stable coin. If you don't know what a stable coin is, it's like Tether coin is kind of one of the most popular stable coins, and how it basically works is every single token on every single token in Tether is backed by $1. So if there's one Tether token, there's $1 supposedly invested in their system. So if there's a billion Tether tokens, there's $1 billion in their system. So $1, one token. So as people buy more Terra tokens, there's more money that is basically stored in their vault or whatever you want to call it, right? So it will never fluctuate the same way Bitcoin's price fluctuates. So you can always move your money into UST or USDT Tether, which is basically a way of like not having to deal with the volatility. So Terra Luna and UST is basically built off that same model of creating like a stable coin. But what they did is they attached a token to their stable coin, and they created this algorithm where, like I just read, if this happens, then you're going to burn more tokens. And if this happens, you're going to increase the tokens. But and then they were also paying like a 20% return on your initial investment. So the system in this ecosystem, and they didn't time when you can actually like if you were earning 20% yield, it wasn't staked. It wasn't for like a year. Like you didn't have to stake the tokens for a year. You didn't have to do anything like that. So there's a lot of things that were wrong with this protocol before this happened. And if you look at a lot of the people in the crypto space, they seen a lot of red flags with this protocol. But the community that was behind it, I don't know enough about Terra because I wasn't in that community, but they didn't pay attention to the red flags. There's big companies that lost a lot of money on this. I'm not gonna say they didn't pay attention to the red flags, but they just were caught by surprise the way this system was built, and then the way it just fell so fast. It's like once that token went from $1 to like 90 something cents, it's like people panicked and panic sold and just dropped the price, which is crazy, right? But it's normal in the crypto space, right? And you wanna like Luna value, recent news. I'm gonna just get straight to the meaty stuff. Yeah, this came against the backdrop. So with Bitcoin hitting a 10-month low, so like one, and then the thing that's really interesting is like once Terra started tanking, it affected the entire crypto ecosystem, and like everything just started tanking. So subsequently, Terra Luna stablecoin, which is algorithmically supported by Luna, lost its $1 peg. According to CoinMarketCap, the price fell to 29 cents on the 11th of May. The CEO of Terraform's Labs, Do Kwon, tweeted a proposal to burn UST on May 11th, despite the community passing the proposal. Terra was sidelined by another problem. The burning was not successful as it attempted to burn more UST than existed. However, Kwon proposed another plan on May 13th that was passed by the community. And what he basically did is he just created a new blockchain. The goal is to try to save the community just because there's a lot of projects that are attached to Terra. So it's like if you were building a stable coin or anything within the Terra Luna community, your main token just fell. So it's like imagine people building on Ethereum and then Ethereum just goes to zero or goes to cents overnight. Everything that's built on that Ethereum blockchain, it's like it's not as attractive anymore. So right now, Do Kwon trying to figure out how can he save the community? And what he tried to do is he tried to create another token to save the community. I'm not sure if that's going to work or not. That's like a whole nother question. But for the most part, when it comes to crypto, only invest what you can lose. If you're not watching the charts every single day, you need to set a stop loss. If the people that set a stop loss, they're not in as bad of a situation. If you didn't set any stop loss and you just got caught on this free fall, it's too late. There's like nothing that you can do. So it's just you got to be really careful trading crypto. This is not financial advice. None of this is financial or legal advice, full disclaimer. And you just really got to understand the space. And you got to be willing to lose what you invested in as well. So that's the end of this video. On the next video, I'm going to talk more about like Terra Luna 2.0 and like what's happening with Terra Luna 2.0. I don't want to make this video too long. I know I said I'm going to talk about that, but I skipped it. And then as far as like understanding crypto and understanding blockchain technology, you really need to understand Bitcoin and blockchain technology before you invest in any one of these tokens. Because at the end of the day, all these tokens kind of came from the original Bitcoin. So I wrote this book called What is Bitcoin? Understanding Bitcoin and Blockchain Technology. I'm going to put a link in the description below. If you have any questions, definitely comment them below. And if you're still watching this video, like, subscribe, and share this video with whoever you think you can add some value to. But on the next video, I'm going to talk about what happened with their 2.0 launch. And I don't think it's personally going to be successful just because once you lose the trust within the community, it's really hard to gain that back. And so much people lost so much money. So it's like, how are they going to make that money back? That's like the number one thing. And then are you going to go trust an individual that did this once? If they did this once, it's more than likely that they may potentially do it again. Again, this is just my personal opinion. But me, I'm not investing $1 into Luna. And if I am investing into Luna, it's a quick day trade. I in and out, and I'm making sure my stop loss is set. And I hope everybody learned their lesson and they set stop losses when they trade. Again, my name is Cliff Pierre. On the next video, I'm going to talk about specifically Luna 2.0. And I hope you all have a phenomenal day. Thank you so much. See you on the next one.